Good morning, and welcome to episode 269 of Getting Rich. I'm your host, Rich Checken, president of Asset Strategies International, and today is Wednesday, March 25th, 2026. Today, I greet you from the beautiful Four Seasons Hotel in Las Vegas, Nevada. I'm here for the 28th annual Oxford Club Investment U Conference. Either Michael or myself or both of us have been to every single investment U over the years. Oxford Club's a great organization. Oxfordians are just the very best people. We love coming to this event every year. The big news overnight is President Trump has announced that Iran has given the U.S. a big oil and gas related present having to do with the Straits of Hormuz. Now, this comes out of the negotiations between Mark Rubio and Iran. And President Trump said it is an incredibly positive development in those ceasefire talks that confirms that we are talking with the right people in Iran. Here, back at home, last week, the Federal Open Market Committee decided to leave interest rates unchanged, exactly as we expected. And I had asked the question of you listeners is, did you think we would see another interest rate cut by the end of 2026? In his comments following the rate announcement, Chairman Powell said that things are still on track at this time for one interest rate cut in the remainder of 2026. I did have one listener come in basically saying that Powell is dug in. He is doing the right thing with regard to interest rates. Inflation is not in check, and basically we need to keep them elevated until it is. Another listener came in and said that Warsh understands his role. He was given, or he will be given the position by President Trump with the expectation that he's going to do his bidding, and he will do his bidding, suggesting that we will see interest rate cuts. And then I have a good longtime friend and client at Senator Bulwith came in and chastised me for not mentioning that we blew through $39 trillion in debt. And my apologies, I will tell you that it is sad when you are numb to the fact, as I was last week, that we went through $39 trillion in debt. It's a massive number, and it is a massive black eye on our economy and our dollar. And it speaks volumes about how mismanaged our currency is. Let's go ahead and take a look at the numbers for the past week. Gold is down 7.9%. It's trading at 4,582.10 this morning. It was 4,973.90 last week. Silver's down 7.6% to $73.31. It was $79.36 last week. Platinum down 6.1% to 1,980 an ounce. It was 2,108 an ounce last week. And palladium is down 8.5%, our big loser. It's at 1,483 an ounce today. It was 1,620 an ounce last week. With gold slightly underperforming silver, it's going to take less ounces of silver to buy that ounce of gold. Your gold silver ratio has dropped to 62.50 this week. It was 62.68 last week. And the dollar, for all this talk of dollar strength, still remains below 100 on the index, and it is a little weaker than it was last week. It trades at 99.29 this morning. It was 99.36 last week. Now, here, among Oxford Club members, I could tell you that I've asked to see if there's any sort of panic whatsoever with the pullback in gold and silver, and the members here are not concerned at all. As am I. I am not concerned, and neither is the Bank of Montreal. Bank of Montreal came out and said that, listen, the gold rally is firmly in place. It is not over, and we will only see it resume once the war in Iran resolves to a point where people can kind of see the end of the tunnel, if you will. So Bank of Montreal believes this rally's not over. The Oxfordians that I'm meeting with believe it's not over. I do not believe this rally is over. I think the longer it persists here at lower levels before gold and silver start to rise, the longer the buying opportunity remains for you before things do resume. Take advantage of it. My question to you this week is, what will it take to get gold and silver moving upward again? As always, we want you to go ahead and subscribe to our YouTube channel, like us, send us your comments and questions. Thanks to those who reached out last week. Follow us on social media. Take our twice weekly, always something interesting alerts and our once monthly information line newsletter. But in the end, don't ever forget, getting rich starts with keeping what's yours.